Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, June 10th, 2008. Well, as we get into today's video, folks, we're going to look at the overview of the markets, what happened today, what was the cause of today's action, how does it all tie into our neutral bias with a slight downside bias in the markets, and where do we see this market going in the near term and the long term coming up. Alright, we're going to look at basically where the market ended today, where do we think it's going tomorrow, where do we think it's going next week, and next month. Alright, and as we look at this, we're going to basically, as you guys know, we focus on pure technicals. Very occasionally, we breeze through the news overall, what caused it, but overall we know that the technicals tell us everything that's going to happen before the news comes out. The news is just the reason the media can blame for the sell-off and so forth, and the greatest example of that is earnings announcements. Earnings announcements are already factored in. You can tell generally to probably a 90% degree by analyzing the technicals on a chart where the earnings will come out and what the cause of the market will do. And the best reasoning for that is when you see earnings, great earnings for a company, oftentimes the stock goes down and everyone scratches their head and says, well, why was that? Well, it's because the chart had it already factored in and the chart was telling us that it needed to be sold off. And vice versa, ugly earnings can come out on a tech play or any type of these financials, and oftentimes you see a rally in the market or in that stock, specific to that stock, even though the earnings were just plain ugly. And again, that's the charts telling you ahead of time what's going to happen. So as we get into today's view and the analysis, we're going to kind of look over all this stuff and just get a general sense of the technicals. Now, as we get into this, folks, I want to just touch base on the webinar we're producing and having this weekend. And again, it's a Saturday webinar, June 14th, and I'm just going to go briefly over what we're going to be covering here. Alright, so let's take a look at what we're going to be covering in this webinar. This is a technical webinar. Those of you that don't know technical analysis, this is going to be great. We're going to focus on pattern, price, and time. We're going to look at Japanese candlesticks and Western bar charts. We're going to look at level 2 and understand market maker tricks. We're going to look at the various scientific ways of learning trend lines, volume analysis. We're going to unlock keys, support and resistance points, essential time period analysis, most effective patterns and when to apply them, indicators and when to use them correctly, and proprietary trading discoveries, contrarian trading philosophies and thinking philosophies, and live chart analysis, putting all the pieces together. So this is an apprentice webinar for generally the middle range trader. Those that are beginners, we're fine with that. It's a live interactive webinar that you'll be on the phone with us, 1-800 number, so there's no charge to you. And we strongly encourage you taking it. Again, it's June 14th, 2008, which is this coming Saturday, 1 to 5 p.m. And if you just go to InTheMoneyStocks.com, you'll be able to find that on the website and can sign up. There's a link right on the webinar page to sign up for it, and we'll email you the instructions immediately. Alright, folks, so let's get into this now that we've covered that. Let's take a look at what happened on the intraday chart today. And all you guys know, it's been a neutral bias since last Wednesday. And the greatest example of the neutral bias and how important it was after we called for the market to fall last Monday, Tuesday, Wednesday, you had that big surge on Thursday and the huge mega reversal on Friday. And the key is, as long as you're neutral there, you don't care what the market does. You understand that basically a neutral stance means the volatility is increasing. That means the up moves and the down moves will be amplified, meaning that if you're a swing trader, you're in deep trouble if you're long or short there, because on those days, likelihood of being wish-washed out or chop, it's like what we call a chop shop. You get knocked one way and then you get slammed the other way, and oftentimes the traders that are holding overnight get really hurt in those situations. It's the worst case. Traders that are holding overnight, they want a trend to continue for multiple days or weeks so they can just ride it one way and then ride it the other. When it's a chop shop, when you go up and down that fast, it's a very risky business, and most people will get stopped out, and if you're not using stops, that's even more worrisome. So in any case, that's why we're in the neutral stance right now, and you've been able to see it. On an intraday level, you can see it as well. Look at these moves intraday. I mean, this is not for the faint of heart here on the intraday. These falls and rises were very, very powerful today. And you can see here up and down all day. And the end result of it, folks, when all is said and done, the market ended flat to, slightly down. You had a slight negative bias today, which is what we've been calling for, the neutral stance with a slight negative bias. And here you see the Dow was up about 9.5 points. The NASDAQ was down 10.5 points, and the S&P was down 3 1/3 points. So overall, you had two main indexes down, while the Dow was up a tiny bit today. So in any case, intraday action, volume was average today, so it wasn't too light, it wasn't too heavy, and overall very choppy day with a kind of a weird sense to it. It was almost like something's going on, or we're preparing for something, on the larger side. Financials, again, were relatively weak, although we did see a bounce in Goldman Sachs today. The NASDAQ, again, as I mentioned, was up 10.5 points, and you had Apple, Research in Motion, and Amazon leading the charge higher today, although Apple was really the only one that was up significantly, up 4 points, while Research in Motion and Amazon were flat. And again, Google and Baidu sold off today, and you've been continuing to see yesterday's weakness spill over to today in Google and Baidu. So in any case, an interesting day on tech side. Gold was down significantly, and let's check out the GLD before we get into the charts. Here's where gold closed yesterday, and here's where the GLD closed today. This is a substantial drop, folks. You're talking about a big-time drop on the GLD, and you can see that on the chart. That's a big drop for the GLD. You're at some interesting support here, and just out of curiosity, guys, look at this pattern that I'm just noticing, and this is all live analysis, not scripted whatsoever, as I talk to you guys, and just look at this. To me, this almost looks like a little head and shoulder pattern on the GLD. So we draw our neckline here, and we'll see where we go tomorrow. You're at support right here at the breakdown of the neckline. And where's the next support area? Right here at the 200 moving average. But you can see shoulder, head, shoulder, neckline, breakdown, and you're right on this cusp. We want to see whether or not it confirms tomorrow, or whether or not we get a little bounce out of it. A big drop on the GLD today, right in that crossroads of a possible breakdown and overall head and shoulder pattern breakdown. So keep an eye on that, folks, on the GLD. On the USO, ever since the monster move last Thursday, Friday, we had the sell-offs on Monday and Tuesday continued. The GLD was down $2, and what I want to show you here is this is our ideal, so far this is our ideal double top. Now, most people like to see double tops flat, like this. We, on the other hand, like to see a double top with one side higher than the other. You want to see the right side slightly higher here than the left side. And why would you do that? Well, because you want to see that all the amateurs are getting squeezed out of that play. Alright, once this breaks the high, once this takes out this high right here on the USO, on the oil index, you know that there's a bunch of amateur having stops there, or even pros having stops, and they're going to exit that position. So once you flush out all the shorts, that basically enables it to actually fall. All right, and it's a weird mentality, but that's all psychology. Once all the shorts exit a position, you know it's going to fall. When there's tons of shorts in a position, it's very rare they let it fall. And again, we're going to continue. It doesn't mean it's the top, but we're looking at it as a possible double top here on the USO, where they really just squeeze those shorts out of it to get them out of this, make everyone think it's going higher. And what do we always say? When everyone thinks it's going one way, that's when it reverses the other way. So here you had that mega spike the last Thursday and Friday. Everyone says, oh boy, here we go to 150, and before you know it, we possibly see a reversal. So we're going to continue to watch this. Again, I'm not saying it's happening or not happening, but it's on our alert system as a possibility. Now on the downside on the USO, you're watching the 20 moving average here, which also happens to be gap fill. All right, now gap fill, we're in that gap window area. Gap window was right here. We closed a little bit below it, so now we watch for gap fill possibly tomorrow, which will equal the 20 moving average. And at that point, we watch to see, does it break lower. If it breaks lower, next support would be down in this area here, right here at the lows, which are going to coincide basically with the 50 moving average, which is right here. All right. Now notice how all these various gap windows and gap fills and gap supports and lows are all coinciding with various technical support areas, and that's the genius of technical analysis. It confirms it. It adds another indicator to your book, and you can be even a more profitable trader by using all these and putting all the pieces of the puzzle together. And that's why you really have to come take this webinar with us on Saturday. I can't stress to you enough. Go sign up. Well worth your while. Unbelievable stuff. You'll learn more. You'll walk away a 10 times better trader if than you ever were. Okay, now let's get to the SPY daily. Let's do a little daily analysis here and see where we are. Well, here's where we had called for that little drop off. Here's the double top, and again, look at the double top and notice how we like this double top. Remember how I talked about this is our call for the topping in the market. You had the fall to the 20, the bounce back here, then you got that little tweak above which breaks the high, and everyone's like, oh well, we're gonna break out now, right? Wrong. Double top with a slightly higher high. The fall in the MoneyStocks.com called for the bounce here, and then we called the next fall, and then we went to this neutral stance, and you had that monster up day, monster down day, and continued neutrality. So overall, you're having that the inside bar days here just kind of chop shop, up, big down, now sideways, sideways with a lot of volatility in the intra-day period. Now, where does this go? Well, we're going to have to continue through Options X being in this kind of neutralist stance, more of a day trader's mentality where we're jumping in for a day trade here or an overnight hold. You only want to hold, we're only looking right now to hold for a couple days max, as we have to be very careful going into Options X next week, and we're going to maintain that. But nonetheless, you could see a little more weakness or you could see a big up day. All right, and I just want you to know that's the neutral stance, and that's why you have to be conservative here, because it's very easy for them to rally this market up big just like they did last Thursday, or drop it big, and you have to be on guard. All right, folks, so be careful there. Continue to watch. We had some solar activity towards the end of the day, and FSLR was a nice little mover here, getting bounced up. So watch solars. Also, have a wonderful day. We'll talk to you tomorrow and see what this market brings. Join the webinar, guys. Take care.